Hi, Tim here from Shanghai Eye. It's hard to escape the hype surrounding the Chinese stock markets at the moment, and one company in particular has been getting a lot of attention. That's the chipmaker Cambricon Technologies. On Wednesday, the company took the crown as China's most expensive stock. That's a title which had been held by Kweichow Moutai for most of the past decade, which is almost as long as I've been covering the Chinese stock markets. It didn't take long for Moutai to snatch the title back though, but it's significant that Cambricon got there at all. I'm not exaggerating when I say that Cambricon's the hottest company in China right now, even more than DeepSeek, a company that it supplies. It's been called a potential rival to the US giant Nvidia, and even China's little Nvidia. And it's astonishing for a company that's less than 10 years old. It was founded in 2016 by brothers, Chen Tianshi and Chen Yuanji, who came out of the elite Chinese Academy for Social Sciences, with one of them specializing in semiconductors and the other in AI. Today, they're among China's richest people. Its latest financial report shows Cambricon posting revenue of 2.88 billion yuan, more than $400 million for the first half of the year. And okay, that's a lot, but it represents growth of almost 4,350%. The company's also now back in the black after posting a loss last year. In the first 6 months, it made more than 1 billion yuan in net profit. The vast bulk of Cambricon's money is coming from chips which support cloud-based AI training and operations. It's got clients like DeepSeek and Alibaba's AliCloud. But its reliance on only a handful of clients has been flagged as one of Cambricon's vulnerabilities. It's partly this growth in revenue that's pushed the stock price so high. I should say that the stock price has already more than doubled this year, and over the past 12 months, it's risen more than 460%. And that means if you're buying Cambricon stock today, you're paying one hell of a premium. Because while their latest earnings are strong, the stock price to earnings ratio is more than 4,400. To give you some comparisons, Kweichow Moutai, which has traded above 1,000 yuan per share for many years, has a price to earnings multiple of just 20. Nvidia, one of the most hyped companies in the world and the darling of the US markets, trades at a multiple of 60. But even the eye-popping valuation we've seen hasn't slowed the rally down. And that's because, to the chagrin of companies like Nvidia, US chip export restrictions designed to throttle Chinese tech development have started to backfire. The sanctions created the conditions needed for Cambricon to flourish. And now, when US chip companies really want to get their products back into China, they find that the Chinese market and the Chinese government doesn't want them. Instead, they're turning to companies like Cambricon, which are making chips specifically designed to work with Chinese tech ecosystems and locally developed AI, even if they can't match Western products in raw power. And regardless of whether the company's sky-high valuation can be maintained and whether it can take and hold the crown for China's most expensive stock, Cambricon proves that if the country's tech companies are prepared to make some sacrifices, China can be self-sufficient in AI chips. Thanks for watching. We'll see you next time.